Hey guys, in today's video I'm going to do a quick review and forecast of what to expect on Nasdaq in the coming week. But before we get to the charts, let's talk about the fundamentals first. So on Wednesday we have the FOMC meeting minutes, and then on Thursday we have unemployment claims as well as PMI, and then on Friday we have Powell speaking. Okay, moving on to the charts, I'm going to focus on the daily time frame first and focus on NQ. So what you can see on the daily time frame is we've had a really nice run to the upside, very clean price action, pushing price up higher and higher on a daily basis. It's clearly targeting the external liquidity, and what I can see is three scenarios happening in the coming week. The first scenario I can see is we go for the external liquidity, immediately come back down to target some of the inefficiency that was created on the way up. So we have a daily fair value gap, we have regular trading hour gaps, and we also have naked pucks as well that were left behind. So targeting one of these areas before pushing further to the upside. The second scenario I can see is we push higher to the upside, target this daily fair value gap, and then from there start to see a pullback to target some of these inefficiencies, whether it's the daily fair value gap here or the one below, and then continue further to the upside. The third scenario I can see is just continuing at this daily fair value gap. We'll probably have some sort of reaction and then continuing all the way to the all-time highs, and then after that we'll probably have a bigger pullback to target the inefficiencies below. Now moving forward, so I'm going to remove these drawings and I'm going to go to the lower time frame. So let's just say 4 hour, and I want to bring back the NQ, the ES chart. So the reason why I think we're going to go directly for that external range liquidity is you can see on ES we've already broken the previous highs. So clear indication that we're moving to the upside. We've also come back down. There was an hourly fair value gap. So if I go on the hourly time frame, you can see we targeted and mitigated the hourly fair value gap. So in terms of the lower time frame, we've already done everything we need to do to continue further to the upside. And then when the higher time frame comes back in play, then after that we'll see the bigger pullback to the downside. So if I go back to NQ here, so you can see we haven't taken the highs yet. Go back to the 4 hour. So yeah, really clean price action. We've done that mitigation, so clearly we're going to be targeting the external range liquidity now. And then like I said, we have those three scenarios. What happens after we break the high? We just have to wait and see whether we continue higher for the fair value gap above or immediately come back down to target the inefficiencies. We'll just have to wait and see what happens next week. Anyways, that's it for this quick forecast. If you found it useful, feel free to like and subscribe, and I'll see you for the next one. Peace.